Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab, and delighted that you are joining me today because today we are talking price patterns. So this is our third week talking about price patterns. So today we're going to talk about consolidation patterns. We're going to talk about transition patterns, so things like double bottoms and head and shoulders and inverted head and shoulders patterns and things like that. And if none of that means anything to you, well, it will by the time we're through today's session. So if you are not following me on X, we've got Mr. James Boyd with us in the chat as well. And James and I have been friends and fellow coaches for almost a decade now. And so, you know, the rivalry there continues, but please follow us both on X at James Boyd CS, at Barb Armstrong CS. And consider this your formal invitation to do so if you're not doing that already. I also want to welcome all the people who are here with us live and that are participatory in the chat. It really helps bring this class to life. So hello to Rob and John, the Noble Savage, and Jay and Richard and Victor and Josh and Will and Carmen and the rest of the gang. So welcome to everybody. And actually it's pretty mild here in Salt Lake City, which is a little bit depressing because we're supposed to get rain even in Park City tomorrow, and what the resorts desperately need is snow. So don't get me going on that. I did ski Sunday and it felt amazing. So I'm really hoping that the temperatures will drop enough for it to be flurries instead of showers. And as we go forward, you know, in our price pattern discussion today, just know that everything, we're going to look at a ton of charts today, but know that everything we look at is for general information purposes only. Nothing is to be construed as a recommendation or endorsement of any particular stock, chart pattern, or investment strategy. We will be using the Paper Money software application on the Thinkorswim desktop platform. And this is a great place to learn and to make sure that we understand, one, you know, what we're doing with respect to the platform and what we're doing with respect to our trading strategies, whether we're trading stocks or options. The one that is most appropriate for us today is that if we use a stop loss order, it doesn't guarantee that we're going to get out at the price that we've requested. And the same thing with a target. If we put in a target price, it may never reach the target, or it gaps up. We could get out at a higher price, which, you know, would be a bit of all right. But, you know, just to know that there are no guarantees. So this is taught in a 9-week rotation, and then we throw in a few bonus sessions along the way. Usually at the end, I'll throw in, you know, the 8 things I wish I'd known about trading when I got started back in 2011. And we'll do something on Fibonacci's or something maybe on Bollinger Bands. So we add a few extras kind of as we go through this. But today we're talking about week 7, so channels and reversal patterns. Okay. So that's our topic du jour. And we're going to kind of look at, you know, what these price patterns are and how they're constructed. And then we're going to look at several examples on the charts and look at how we can use those patterns to determine an entry, to determine an exit, to determine a target. So we've got a lot we want to cover. Okay, so with price patterns, you know, they occur because you've got a horizontal and diagonal support and resistance lines, or horizontal or diagonal support and resistance lines to create common shapes. Sometimes it's a rectangle, it could be a wedge or a triangle, and each pattern has a unique construction. And these can occur over any number of time frames. So you can look at these patterns on a 1-minute chart. You can look at these on a 1-year daily chart. You can look at these on a 10-year monthly chart or a 5-year weekly chart. Yeah. And, you know, like I said, we can use some of these patterns to determine entry and exit signals, sometimes for, you know, a swing target, you know, and we'll talk about this specifically with respect to these trend reversal patterns. And Holly, yes, you can get a link to the series. James will post it in the chat, but it will also be posted at the end of this webcast. There will be a link if you're watching in the archives. There, it will also be in the show notes, a link to the playlist for this series, but I'll show you where you can access that. So the first pattern we're going to talk about is a channel. And this is a sideways channel, but we can have an uptrending channel. We can also have a downtrending channel. But, you know, we're seeing something that is trading within a range. And this can, you know, be bullish. It can end up being bearish. It can occur over multiple time frames. And we look at something where we have a strong trend and then a period of consolidation. Okay, where we see something coming down and hitting, you know, these support levels repeatedly, and then a similar resistance level repeatedly as well. And when it does break out, whether it's to the upside or the downside, if we look at this, so we bring up my drawing tool. If we look at how wide this range is, that's how we will determine our target. So if we have here, you know, a range that's say about 10, let's start here. That's about $10. We'd expect about a $10 move to the upside. Now it may move up more than that, but if you're looking for a target estimate, now we could also use Fibonacci's to determine a target, but when we have a breakout like this, you know, a technical trader, that might be a logical potential target. So when you're adding it to the point of the breakout, and if it broke out to the downside, then you'd be looking for about a $10 move to the downside. Okay, so that's one way to determine a target when we're looking at something that's trading within a channel. Now, another pattern that we see on occasion is a double top. Now, the market has been pretty bullish. There are stocks that aren't playing along on the bullish train. In fact, I've got a list of probably 30 or 40 of them, but I haven't seen, and, you know, but what would it look like? Well, it's cut a new high. So it looks like just a trend. We talked about flags 2 weeks ago. There one keeps on this low, and then it goes up and it doesn't establish a new high. It establishes a similar high and then comes back down. And it does this time, it doesn't bounce, it breaks to the downside. And when it breaks this, what they call this neckline, then the way we'd measure our goal here or a potential target is, again, let's say this one was 20, you'd expect a move of maybe 20 to the downside. And it looks like on this one, it ended up going even below that. But, you know, that's your way of determining, one, a target, and two, when you might place an entry. Now, typically, a trader who's looking to trade to the downside might use an option. You know, they might, in this case, when this breaks to the downside, perhaps they'd buy a put or do a long put vertical or sell a short call vertical above that neckline, as opposed to selling a stock short, which comes with unlimited risk. Okay. Yeah, if your sound is not good, please just hit refresh and hopefully it will be better. Okay. Okay, good. All right, so double bottom. So this is kind of the reverse, right? Like we just looked at a double top. And now if we come, you know, to the downside, we've got a stock that's been downtrending. And then we see, I always think of Queen, there's a song about a certain type of bottom girl, you know, and if you just kind of, and again, it's the same. If we see this kind of a $10 range here, then we'd look for a potential target of a $10 move to the upside. Now you might just say, like, I don't want to put a target in. Like if it breaks out and comes back down. So you might say, well, here's a hammer, and a hammer pattern requires confirmation. So maybe I put in a conditional order to say, if it trades, we have this trade or close above the high of the low day, then I'll get in. Close above the high, that's supposed to be an H of the low day. We call that a hold. And so if you had put in a conditional order, you would have gone in here. And it would have worked out not too shabby. So our entry, is when it breaks that resistance line or goes through the ceiling. I think of support and resistance as kind of ceilings and floors. And then our target, you measure this distance here. Okay, and add it. It all seems really easy. Yes, it is Queen. The song that I was referring to. Okay, so let's get out and look at the charts. And there's several other patterns as well. And just to review those quickly before we go to our charts. So we did a double bottom pattern, but we could also have, here's our resistance line. We could have a stock that's been downtrending, and then it comes down, and then it comes like this. And we call that a cup and handle. So there's the cup, there's the handle, a cup and handle pattern. We could also have a line like this. Well, let me do it over here where it's less distracting, where it comes down, and then it comes down again, and then it comes down, but it doesn't come all the way down. So here's our bottom, here's our range, and our range could be 20 points, but it's not really a double bottom. There is a cup and handle in it. So here's the cup and here's the handle, but we call this an inverted head and shoulders. So here's the first shoulder, here's the second shoulder, and here's the head. And again, we're looking for a breakout. And then sometimes some traders will say, well, I'm going to look to make sure this breakout isn't a fake out. I'm going to look for it to retest. And then when it bounces, I'll get in. Yes, JB is a Cahold man. Today he was a married put bro. Somebody said, I think of married puts as like a prenup. And I thought that was kind of a good analogy, but I digress. Okay, so let's come and start by looking at Visa. And I said that, I really hadn't seen a lot of head and shoulders type patterns on the chart, but this was one that I did find. And so, if we look at this and draw a line here, so it came up to almost 358. Let's just make it 358, so for those of us who want to make the math a little easier. And then I like drawing on charts. I know James does too. So we had a rise and then it came down to this area, and support is not a finite number and neither is resistance. They're kind of a range. And then it came back up, came all the way back down, tried to rally, came down again. So this is, I like to kind of draw it like this, like, this is that head and shoulders pattern. And then what we're looking for is it to break. And so here was our breakout. And I post charts like this a lot on X. And then it came up and it retested. So here's the breakout, here's the retest. And then an entry here would be what they call a kablode, a close below the low of the high day. And then what might a target be? Well, we take our 321, subtract it from 358, which smells a lot like $37 to me, ish. Okay. And so you'd take your 321 and you'd subtract 37. So your target would be like off this chart. Your target here would maybe be 284. And so, like, how might you take advantage of that? Well, if you traded options, you might, a trader might, as an example, buy a put. Now, today it's rallying. So you might say, hey, if it goes below today's low, a close below the low of the high day, then I would enter that trade. And this is where a target might be. Okay. Yeah. And so let me just shake the Etch-a-Sketch here and close that. Now, in this one, we're going back in time. So when this broke below and then came up, let's say the next day you were going golfing or skiing or, on a vacation, you could have put in an entry and said, hey, if this goes below this high day, so if this goes below 317.82, let's say it goes below 316.82, get me in. Then you would have been in right around here. And there's no guarantee when you put in a conditional order that it's going to get filled at exactly that price. But this is where conditional orders can sometimes serve you well. Okay, so let's look at floor. FLR. So what kind of pattern are you guys seeing here? Here's the stock, like year to date, this thing is up 30%. And, it obviously had an earnings announcement that kind of rocked everyone because it had this catastrophic, jump out the window kind of fall here. But we're seeing this, if we come down here, we're seeing this big double bottom pattern, right? Sponsored by Queen. Double bottom. Sorry. And then we had the breakout and it came back to retest, and it's still kind of flirting with this support level. But, and again, if we wanted to put a target on this, we could just take that 51.85 and subtract 39.56. And again, these numbers are, and that would be 12.29. So if you said, well, I'm going to add $12 to this, so a potential target might be around 63. So your target might be up here around 63. Or you might say, like, I'm just going to make it like 61. I mean, it doesn't have to be at the tippy top because, these are ranges, not finite numbers, right? But whether this is a double bottom, a cup and handle, or an inverted head and shoulders, you would make the target would be determined the same way, the width of the pattern. Now, are these always like totally horizontal? To quote John Pinette, I say nay, nay. Let's look at Mickey D's. Let me just close this. So here we have, it's like not the tidiest cup and handle, but it's been trading within a range, but it's kind of, I'd say, cup and handle-esque. Oops, it didn't clear things. In that it came down, this low was a little bit higher, and then it broke out, came back to retest, and is now moving to the upside again. So, if you wanted a target, you could do this same kind of thing. And if we're looking in hindsight, because, part of learning is looking at charts and saying, when would I have gotten in? Well, if you had put in a conditional order here, you would have been in here, and then you might have been freaking out because then it did pull back for a couple of days. But just say, hey, I'm going to be patient, and it pulled back, and it's moving on up again. Um, yeah, so somebody is asking, is there such thing as a double cup and handle? And I'll say kind of not as an official pattern, but sometimes I'll say it's kind of like a Russian stacking doll, in that you can sometimes have a pattern where it comes down and then it comes down again, and then it comes down again, and then it comes down again. And it's like, well, is this was a cup and handle, but it didn't break out. So then, okay, is this the cup and this is the handle? But then it didn't break out. And then here's the cup and here's the handle. And I've seen that happen. Yeah. Yeah, I don't know that we describe it as an inverted cup and handle, like at as a bearish sign. But I'm not saying it doesn't exist. I'm just saying I'm not aware of it. James, what say you on that? Okay. Now, KDP, I've seen a lot of people talking about KDP recently, Dr. Pepper. And so, here's another one where it's not the tidiest, because we did have it gap up here and come back down, but it's kind of, again, cup and handle-esque. And today it is breaking out. So there's our cup, there's our handle, and we've got almost, a $5 range, like about a 480 range. But you might say, I'm going to wait and see if this comes back to retest to make sure that this is a legit breakout, not a fake out. Now, we did just have earnings. Whoops. So you may want to go and see what the analysts are saying. Yeah, and somebody's saying it's a bit like a Rorschach test. And this is where, there is an art to technical analysis. And, I would sometimes talk to somebody when I was learning how to do this, and I would see one thing and they'd say, oh, but did you not notice this? And so one of the things that someone might have drawn my attention to back in the day when I was just starting to say, okay, you wanted to have a $5 target, but I see potentially that this old support level could be a new resistance level, and it could have a bit of a challenge breaking through that. And so maybe you'd rather just make your target here around the 3250 level. Yeah. So, that's something that we want to consider when we're establishing a target also. Now, in honor of the fact that James is here today, okay, so we talked about KDP, Mickey D's and Visa. We're going to talk about Crocs, because James once posted a picture of himself where he'd been working outside in his Crocs and didn't put sunscreen on his feet, and he had tiny little circular burns all over the top of his feet. So we say, don't mock the Crocs. But Crocs has been trading in this range since when? Well, since last August, right? It came down, and you might say, well, this was a bit of a triple bottom, or you might just say it's been trading in a range. Or you could say, so some might say, yeah, cup and handle. There's our cup, there's our handle. But the net of it is, it's come up and hit this multiple times, right? Bang, 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 banging its head on the ceiling. It finally broke through on earnings, and then it's been kind of consolidating. And so again, what might a target be? Well, with Crocs, our range here is, if you want to use my numbers exactly, 1863 is our range. But we could say, well, let's just make it $17. And if I go from 92 and I add 17, I might have a target around 109. And so maybe I say, well, I'm going to make it like 108. And could we just buy the stock and have a target at 108 or 109? We could. Now, this candle pattern is suggesting this hammer pattern at a potential level of support. You might want to wait until you have confirmation. And you might say, well, you know, I'm okay with doing this as a stock trade because if it takes an extra couple of days, I'm okay with that. You know, and that's up to you. It's currently trading at 96.52. Now, where might we put a stop? Well, we might say, if I see this as being a support level around this $92 level, I'm going to make, so my target, I've already written that down, 108. And I'm going to make my stop. So this high was 92.12. 92. So I'm going to take 92 and we're going to go 3% below that. So we're going to make our stop 89.24. And let's say, you know, this is a $500,000 account, so we could have a $25,000 position. So let's say we decide we're going to buy 250 shares. So we're going to come over here. We're going to buy custom with an OCO bracket. So we're going to make this 250. And then when I turn this firecracker into a paper clip and click anywhere on these three lines, it will even the quantities up. I'm going to make our exits good till canceled. And our target here is going to be 108. Now you might say, well, I want to make it 109. Well, it's your example trade. You can make it whatever you want. And then our exit is going to be 89.24. And now, can we move the stop up if the stock starts to move up? Absolutely. Okay, and this is based on the width of the channel. Oh, that went awfully fast. So there it is. You know, I wanted to show how much we stood to gain versus lose. I didn't mean for that to go through quite so quickly, but we'll do another example trade. And, you know, when we look at this position, so we bought our Crocs here, and how big a position is it? 24,000. Okay. We also did a trade on Apple last week, and we're up like a modest amount, 2.48%. And this was another one trade that we placed as a price pattern trade. And this was one where some people will look for something to break out of a price pattern. And we can do that, but we can also trade within a price pattern. And this was a trade within a price pattern where we saw this bouncing at a diagonal resistance line within a pennant pattern. And we said, what if we just traded up to the top of the pattern? Our target's 276 and it hit almost 275 today. And so if it goes up again tomorrow, that might hit our target and we would exit the position. Okay. And so we can trade within a pattern. And so if we come back and we look at Crocs again, now this one has broken out. But, you know, when it came down here and bounced here, could we have put in a target, you know, back up in this neighborhood? Well, we could have. You know, so you can trade within patterns and then you can wait for a breakout to happen. Okay, let's look at Coke. So we looked at KDP, we looked at the Dr. Pepper gang, and you know, now we're looking at Coke. And it's been in kind of this consolidating pattern here, you know, for a while. Like it entered this range back in June where it seemed to have trouble getting above like this 73-ish level. And some might look at this and again, what kind of pattern? You know, I see another cup and handle, right? And, you know, it's gone from 65 to 73. You might say, well, that's not that big a move, or 66 to 73. 73.13 minus 65.75. So $7-ish, this is 7.38 from where I've drawn my lines. Now you might say, well, that should be 65.35. Well, you know, these are ranges again, right? So, and if we said, well, our target then, if I added it, would be about $80 if I went to 73.13 plus 7.38. The target would be about 80.51. And where did it go to? It went to 81.09. Like to me, that's fascinating. You know, and where would the entry have been? Well, either this day here or maybe this day here. You know, and if you'd gotten in here around that $74 mark, you know, for a stock that isn't terribly volatile, and, you know, you might be pretty happy with that result thus far. You know, but does it always work out? No. But that's just kind of looking back at a historical example. Now, I said that channels aren't always sideways. So let's look at, anybody's thinking about lunch, my apologies. We're going to go to Domino's. And Domino's has been falling like dominoes. Sorry, bad joke. But, you know, it was kind of falling within this channel here, right? And then it broke out, came back to retest. So we're going, okay, it was a breakout, came back and bounced, not a fake out, came up here, and then the downtrend continues. So now it looks like it's been trading within, like it broke out, but is still downtrending, but now the range has moved. Today it's breaking out. And then my question, especially when, you know, it looked like a breakout and a retest and then kind of continued to roll on down the hill. Yeah, I'm going to need a little bit more from you before I believe that this is truly a breakout. But you might want to again go and look at what the news is, because we just had an earnings announcement. You know, and again, if you're trading this, like, you know, some might, if you're an option trader, say, well, this is a candle that indicates that it may be rolling over, but it didn't. And this is where those rules around technical analysis, candlestick patterns might have saved you from, you know, a trade that didn't work. Because if you were waiting for confirmation, we did not get it today. So, and the confirmation would be for it to trade lower than this day, or than the body of this day. And so if you're looking for, you know, and you're new to candlesticks, and so you're looking for some guidance, if you've not subscribed to the Trader Talks channel from Schwab Coaching, you're going to want to do that. And where it will bring you when you first come in is to this page. And what comes up first is whatever is currently being taught or whatever is going to come up next. And then if you come to playlists, somebody had asked earlier, where to find the playlist for this class. So this is the playlist for getting started with technical analysis. And, you know, week 3, week 4, week 5, last week was week 6. You know, and today is week 7. So, you know, I've got to go in and I guess make a little change there in the title. And then there's candlestick patterns. I've done a series of shorts. Now they're within the body of that playlist, but if you want to see them all grouped nicely together, there's this folder I created called the Trade Management Mini Sessions. And if you click on that, I'll put a link into this. I'll put a link in the chat, but I'll also put a link into this in the show notes below. And so what I've done is created a bunch of shorts. So these are all like 2 to 5 minutes long. What's a hammer? What's a hanging man? What's a shooting star? Then if you scroll down, there's a bunch of example trading plans. And then if you scroll to the very bottom, there's some just quick tutorials on how to use Thinkorswim if you're new to that. So how to customize a Thinkorswim chart, how to customize, a watch list, how to place an OCO order, how to create a scan. I'm doing one this afternoon on the monitor tab, so you'll see that. I've re-recorded that because they only let these stay up for so long. And those were all really popular. So there are some additional resources you can check out. Okay. So let's come and look at Decker. So we're staying with the Ds. So when we look at DEC, so DEC's been, on the struggle bus, it's been falling, and it's been falling, because it looks like it didn't just start. It's gone from 223, almost 224 down to $78. Like, wow, that's kind of harsh. But when we look at this pattern, what do you see? If we're playing I Spy with My Little Eye, which is one of my, favorite games to play in the technical analysis world, I see, an inverted head and shoulder with a breakout sponsored by earnings. And then so breakout, and then it came back to retest. So an entry could have been today. And this has gone from 79 basically to 109, so 89, 99, 109. So you've got a range of about 30 here. And so if we take 109 and go up to 139, that might be a target. And we know it's been up, above 139 before. And when we look at our price earnings ratio on this, and if you don't have that little red bar in your chart, I do have a script that's in the post pinned to the top of my X feed, but you can also come down here and say, well, some people would look at this and consider it to be a value stock at this price with a price earnings ratio of 17. And that's kind of beyond the scope of this class, which is, technical analysis. But if we look at this and we said, okay, we could have a target here at 139. It's only trading at 119. Yes, we didn't get in at 115, but we haven't completely missed the boat here. And so if we said, okay, I'd like to take advantage of this. And then again, where might we put a stop? Well, some might say here was a recent low at this 110.05. So I'm going to go, and you might say 3%, you might say 2%. I mean, it's up to your individual trading plan. That would make it 107.84, which would still be below this line of resistance, which appears to be acting as a level of support. And so if we came in here and said, okay, we want to buy custom again with an OCO bracket, our target on this is going to be 139. And our exit is going to be 107.84. And I'm going to buy 200 shares, which would still put me under that 25,000. And so we're risking 11 to potentially make 19. But keep in mind that this stop isn't a guarantee that we'll get out at this exact price, and neither is this target, a guarantee that we'll get out at exactly 139. If it gaps up or gaps down, we could be out at a little bit, we could be out at a different price. Okay, so it's important to remember that. So we're going to put that with our stocks with a target. And this is based on that cup and handle pattern. Okay. So I just wanted to look at, just as we wrap up, we didn't look at an upward channel. But here is an example of American Express, which was trading in this upward trending channel. And then it broke to the downside. It broke below this diagonal support level, came up and retested, and then fell again. So sometimes things will break out to the upside, and sometimes they will break to the downside. Okay. And if we look at something like Disney, you might say, well, I see potentially a double bottom setting up, but it's still in process. But, could you say, well, I am going to place a trade and just trade it back up to this 115-ish level? Well, that's, that's a possibility for an example trade, right? Or if we look at CRM, it was trading in a sideways channel, and then the downtrend continued. So drawing lines on the chart. So what I encourage you to do is bring up a heavily traded watch list, something like the NASDAQ 100, the S&P 100, or the Dow 30, and then just click through and look for patterns and draw some lines on your chart. So today we've discussed head and shoulders patterns, double tops, double bottoms, and inverted head and shoulders, cup and handle patterns, and trading within ranges, stocks that are trading within ranges. Oh, excuse me. So that's a wrap for today. We did place 2 example trades, one on Crocs, one on Decker, and both of these had targets based on the width of the pattern. Okay, so please subscribe to the channel if you haven't done that already. Please hit the like button. It helps move this up in the trading algorithms. And then please follow both James and I in the land of X at James Boyd CS and at Barb Armstrong CS. Thanks to James for joining us in the chat and for being a good sport about me, sharing your polka dotted sunburn, thanks to Crocs. Thanks to the guys behind the scenes for helping bring this webcast to life. Have a great rest of your day, everyone. Up next is Swing Trading with Mike Fairborn. So stay tuned. Bye for now.